Hey traders, welcome back to my channel. So today we are going to discuss how you can accurately test your trading strategy. Assuming you have a solid strategy that can make you profitable, you'll want to backtest it using historical data to see how well it performs. For those who don't know, backtesting is the process of evaluating your strategy against historical data to see how well it would have performed. This gives you the win-loss ratio and other statistics based on the historical data that is available. For historical data, I recommend using TradingView. I'll provide the link below. They have pretty cool features available for free, but we'll talk about that in a moment. Today, we'll see how to accurately do the backtesting. First, let's understand a common problem in backtesting. For example, let's assume I'm a moving average crossover trader. What I have seen in different YouTube videos and on different platforms is that many so-called traders show the wrong way to do backtesting. They tell you to enter a trade whenever you see a crossover, like this. You see a crossover here, so you take an entry here. You see another crossover here, so you take another entry here. You see another crossover here, so you take another entry here. That is a very common mistake people make. Why is this a mistake? Let's say this happens at 2 a.m. You are not going to trade at that time, right? Whatever time zone you are in, you won't be trading at that hour. I'm currently in the New York time zone, and I don't trade at 2 a.m. I don't think anyone does, so this is not the way to backtest. Why does this happen, and why is it important? We have different trading sessions, the London session, the US session, and the Asian session. Each session has different levels of volatility. For example, in the London and US sessions, the volatility is quite high. In the Asian session, the market often consolidates. So this is very important for backtesting. For me, I start looking at the charts when the US session opens, generally around 9 a.m. I draw a vertical line to mark my trading window, which goes until about 4 or 5 p.m. You should also select the time when you will be actively trading in the future. Next, test your strategy 50 times, or better yet, 100 times. Testing your strategy 100 times will give you a better idea of its effectiveness. For example, if 20 out of 100 trades fail, you can say that the failure rate is 20% and the win rate is 80%. This gives you a better idea of your strategy's performance. Another important aspect is to use TradingView's replay mode. This feature hides future data, mimicking real trading conditions where you don't know what is coming up next. This feature is available in the Pro plan. When you point to a particular time frame and click the replay button, the data from that point onwards is hidden, so you don't know what is coming up next. This gives you the feeling of real trading. Now let's set up our charts on TradingView. First, install an indicator to show trading sessions. Click on Indicators, search for Sessions, and select the one from Lux Algo. Add it to your chart and customize the settings. Since I trade during the New York session, I'll uncheck the other sessions. You can also adjust the trading hours based on your time zone. For me, I trade until around 4 p.m. You'll see a controller for the replay speed. For example, set it to show 1 bar per 10 seconds or 1 bar per second. Click play and it will advance through the bars at the chosen speed. Test each day within your trading window and look for entry signals. If no signals appear, move to the next day. Remember to log your trades, including entry points, stop losses, and targets. Keeping a detailed log helps you analyze your strategy's performance after backtesting. I hope this gives you a clear understanding of how to correctly backtest your strategy. This method will help you significantly. Thank you for watching, and I'll see you in the next video.